You guys have probably heard this before. Nothing is certain but death and taxes, right? Benjamin Franklin said that, but every time I hear that quote, I think people are misquoting Benjamin Franklin. He actually said, nothing is certain but death, taxes, and a recession. I'm kidding, but a recession is coming. It always is. Recessions always happen. It's the cyclical nature of our economy. And I want to give you four stocks that will help you outsmart the next recession. So stick around. Hey guys, welcome back. I'm Richard Allen with Tip Ranks TV. Thank you so much for letting me tell a terrible joke in the beginning of this video about Benjamin Franklin. He certainly didn't say anything about recessions in that quote, but it is certain that a recession will happen. Our economy is cyclical. Another thing that is certain is that life goes on during a recession, and people still need essential goods like food and cookies. That'll be the last stock we talk about in this video. But I want to talk to you about four stocks that will help you outsmart the next recession. We're going to start with Coca-Cola. Coca-Cola recently delivered impressive organic sales and managed to expand operating margins amid a challenging operating environment. Thanks to its stellar performance, Coca-Cola stock recently hit an all-time high of $67.20. Coca-Cola CEO James Quincey is confident of achieving the full-year guidance and delivering strong top-line growth in 2022. Quincey added that Coca-Cola is well-equipped to win in all types of environments as we fuel strong top-line momentum and create value for our stakeholders. Coca-Cola plans to deliver impressive organic sales growth of 7 to 8% in 2022. Further, it projects adjusted EPS growth of 5 to 6% and free cash flow of approximately $10.5 billion. Evercore ISI analyst Robert Ottenstein had this to say about Coca-Cola. We see a positive setup for KO over the next 1 to 2 years as mobility recovers. Commodity inflation presumably peaks and recession-worried investors move into staples. Not staples like Office Depot, but staples like Coca-Cola, for instance. But we know what Robert Ottenstein thinks about Coca-Cola. What do the other analysts on Wall Street think about this company? Coca-Cola, trading under the ticker symbol KO, is actually up almost 2% today. It is a moderate buy based on 18 analyst ratings with an average upside of right around 6%. Now, one constant you're going to see in this video is that none of these stocks have a crazy upside over the next 12 months. But one thing you want to do in a recession is you want to kind of bulletproof your portfolio against some of the crazy movements that you'll see out there in the tech sector and things like that. A lot of these companies are staples, companies to carry and have in your portfolio as a hedge against crazy movements and more riskier plays. The second company on that list, keeping that in mind, is Procter Gamble. Procter Gamble delivered solid organic sales growth of 10% during the most recent quarter, led by higher volumes and pricing. Due to ongoing momentum in their business, Procter & Gamble actually raised their revenue forecast for fiscal year 2022. PG now expects organic sales to increase by 6 to 7%. Moreover, it projects core EPS to increase by 3 to 6%. Also, Procter & Gamble plans to pay $8 billion in dividends and repurchase stocks worth about $10 billion in the fiscal year 2022. In response to Procter & Gamble's recent quarterly performance, Jefferies analyst Kevin Grundy had this to say: PG remains a core staples holding. He added, with strong demand outlook, though partially offset by a tough cost environment, the durability of P&G's business model, brand strength, evidenced by market share momentum, scale advantages, pricing power, and strong leadership were all evident in the quarter. We all know what Jefferies analyst Kevin Grundy has to say about Procter & Gamble, but what do the other analysts on Wall Street think? Procter & Gamble, trading under the ticker symbol PG, is a moderate buy based on 15 analyst ratings with an average upside again of right around 6%. Again, nothing to write home about for an upside of 6% over 12 months, but potentially a safe bet to carry this stock during a recession. Number 3 on the list is Costco. Costco is firing on all cylinders, reflected through its robust comparable sales growth. Also, it recently hiked its quarterly dividend by 9%. Costco continues to post double-digit comparable sales growth regardless of inflation and supply chain worries. Its value offerings and high membership renewal rates bode well for growth. Ivan Feinseth of Tigris Financial had this to say about Costco. COST's incredible merchandising and supply chain management capabilities, combined with ongoing store growth and international expansion, will continue to drive strong business performance trends. So we know Tigris Financial likes Costco, but what do the other analysts on Wall Street think about this company? Costco, trading under the ticker symbol COST, is a strong buy based on 20 analyst ratings with an average upside of, look at that, almost 9%. Again, nothing to write home about, 9% or so over 12 months, but again, another safe stock that is essential. Even in a recession, people need to go to stores and buy things like cookies. The fourth company we're going to talk about is Mondelez International. Confectionery and snack food giant Mondelez delivered solid organic revenues aided by higher pricing and volume growth. Mondelez's top line could benefit from additional pricing actions and higher volumes. It recently announced the acquisition of Grupo Bimbo's confectionery business, Ricolino, for $1.3 billion. In response to this, Mizuho Securities analyst John Baumgartner stated that Mexico is a high priority market and the acquisition for Ricolino adds scale. The analyst added that the deal will double the size of MDLZ's Mexico business and significantly accelerate capabilities. All right, so John Baumgartner loves Mondelez International, but what do the other analysts think about this company? Mondelez International, trading under the ticker symbol MDLZ, is a strong buy based on 13 analyst ratings with an average upside of almost 11.5%, which is pretty darn good for the companies that we've been talking about. Guys, I want you to take a peek at these companies. I want you to think about recessions and how you can bulletproof part of your portfolio, at least, against these crazy movements in some of the stocks we see, like Tesla and Twitter and some of these other companies that are a little riskier than hanging on to some of these companies that we talked about in this video. Thank you so much for joining me for another video. I appreciate each and every single one of you. Remember that you can find exclusive originals and also these videos that we post here on YouTube in an ad-free format over on Tip Ranks TV with the top link in the description. And I'll see you in the next one.